All right, y'all. I think I'm not sure if they understand the magnitude of this call, but it's been for sure a long time coming. I'm hopping in this one live. Well, the market is moving, but we're gonna do a post-trade analysis of the FOMC statement, some things that we picked up. But without further ado, whew, I wanna give the floor to my dog Dove. The big dog is in the building.
Oh man, nah. I appreciate you, bro. But I would say this was a team effort, man. Just, ironing, sharpening, ironing over the years, and just really pushing each other, to continue the journey, and you could definitely see the growth. We moving in a proprietary space now. So no more retail concepts, for the most part when we're talking about the technical analysis, at a the micro standpoint. And so I'm just excited, bro, to get back on this and, do really what we came to do. And that's really just to help the people and, give them the opportunity to change their life with the information. So yeah, man, no, I appreciate you, bro, and everything that you're doing for your community and our community. And without further ado, I'm gonna give it back to Jay.
Hey, you heard the man. Let's get to it, man. That's my mentor right there, W. Arnold. If you don't know, go follow him on all platforms. W. Arnold Financial, you'll find him there. All right, so yeah, like we said, it's been a long time coming. We've gone and grown from the retail space and moved into more professional waters, right? If you will. So just like any skill set that you possess, once you get to a certain level, you want to perform at a higher level, at a higher intensity. And the only way to do that is to seek out higher performing individuals. And that's what we did. We put ourselves in these rooms. We utilized the skill set that we had at the early stages and expounded on it. So I want you guys to see some things. I was doing a post-trade analysis, and you guys can see everything here, post-trade analysis on the FOMC statement, right? I know a lot of traders get uneasy, a little emotional when these rate statements happen. You hear a whole bunch of things leading up to it. This was the first rate cut this year. Um, we hear things like inflation is rising and unemployment is increasing and they're cutting rates. What does that even mean? So I've taken the time. I know it's been a while since you guys have seen me or heard from me, but I've been taking the time to get my associates in economics just to better speak this ism to you because this is the language and it's a way of life and it's a way of being. Just managing your scarce resources. So with with the little bit of time, the little bit of money we all may have, let's go ahead and manage those things in the best way. So I went out and seek the guidance of professional traders, proprietary traders who trade specifically for profit for a firm. The firm provides them capital. They trade it to increase that capital for themselves and for the firm. So it says, I know I ask a lot of people in their beginning stages of training and trading, what do you want out of this skill set? Everybody says they want to make more money. They want to make money. They want to sustain their life with this skill set. And we all have that. Others say they want their time back. Some say they want to prove that they can accomplish something that most people cannot. All admirable goals. How do you how do you do that though? So I found this particular sentiment that across the board, each of these FOMC meetings has the same sentiment from the people that have the most amount of the asset, in this case, US dollars. So right here, we're looking at the US dollar Japanese yen currency pair. Dollar is the dominant pair, the yen is the recessive pair. So we're looking at the currency conversion in between those two. From the daily perspective, you may not know what the circles and the dots are and all the rest of that stuff. And at this point, I'm talking to Dove more so. I'm talking to you guys that may be just now learning. But from this top-down perspective, what I want to give you guys is a brand new and a much clearer way to analyze these official cash rate statements, CPI statements, unemployment rate statements, Federal Open Market Committee rate statements, and this is gonna blow your mind, right? So we understand volume spread analysis, effort versus results, Fibonacci sequences, Elliott wave. You can do whatever you want to do to place your trades, uh, barring it fits your entry criteria. And the trades that we're gonna be taking when you see us during the wealth management retreats and anytime that we trade, the trades we're going to be taking are going to be on a scale 1 through 5. It's going to be a 4+ on that scale. So it's going to have a lot of conviction. It's already going to be in phase C, D, or E in the Wyckoff structure. And we'll talk about what that is. And right here, I think you guys can clearly see an accumulation structure once we get out of here. Once we broke out of this trending condition, right? As we can see here. And there's a really cool feature here on TradingView now. It's a demonstration feature, so just you guys can follow this red dot around so I don't have to shake the mouse so you can find me. So all my teachers out there that use TradingView, they got this red dot feature now just for you and me, right? So doing my post-trade analysis on why this trade worked out that I knew was going to work out. Um, I now have, and I'll pull this up for you guys. It's more of a checklist than it has ever been. But there are things here. Copy the media. Let's see if I can't get this over here. Yeah, perfect. So there's things I look at before I take any trade, right? I could show you guys this, which I will in a second, but I want to get this in a clear spot before we go down to the lower time frames. Right, so we're going to look at relative strength. That's 25% of our filter. We'll talk about that in excruciating detail, even pull up that later in the video. I don't want to take too much time on that. We perform a commitment of traders analysis, which is a commercial sentiment analysis. It confirms where the smart money is properly aligned, and it also completes my relative strength analysis. It's the last thing I do to see where the smart money in each market is positioning themselves prior to big movements like these. So we have the macro analysis. In this case, it's the FOMC statement, right? In this case, it's FOMC. And with FOMC, we know that that occurs at 11 a.m. Pacific Standard Time. And then we have the press conference at 11:30. So that's all part of that macro event, trying to find the catalyst. We need something that's going to increase the volatility. I'm not trading if I don't have an event that's going to boost my trade. I need the intention of the large operators present in order to take that trade. I don't want to be stuck in this sideways market thinking that this is the move when in all actuality, this has nothing to do with with any macro event. It's actually them conditioning the market to create a trading range. So we can see with these volume spikes, I got the vert there on the 11 o'clock bar, but on this volume spike here, we can tell that there's an effort and result disharmony, meaning prices are being pushed in a way. There's a lot of activity, a lot of volume, but there's not much spread on the bar as we would expect. So the effort and the result don't match. And I always say the analogy of you press the gas in the car, but instead the brakes are the response, or you press the brakes and instead the gas is the response. And it's completely disharmonious to what you would expect. That's price action in this effort versus result spike. So I just want you guys to see that really quick. But we know that the time of the FOMC statement is 11 a.m. So we can put our vert on 11 a.m. because we expect something to happen there, right? And then we just did our volume spike analysis. We knew something was going to happen. The volume spike shows up, we know within 3 to 5 price bars, something big is going to occur. They're holding price there for some reason. This is a precursory movement, and it tells me that, hey, start looking at momentum. Check these lows. You see the lows are increasing here as they're flattening out there. That's a momentum divergence. So I know that is going to occur soon within the next 3 to 5 bars. So, but if the spike shows up and I'm oblivious to what's going on, maybe somebody hit me in the head with a rock. But you don't you don't not watch out for FOMC. I already know that the next FOMC is in 37 days. So I'm always watching for FOMC because there's a lot of volatility that comes from it. So that's why I'm going to decipher the FOMC statement like a professional in front of you guys. So enjoy this. So as I'm going through my checklist, I know this is my favorite time of the year. It's probably one of the only times that you'll see me hop on some trades and apply my maximum risk. So I position this at 3%, um, per position, which is the max percentage that I can trade in any trade in my professional trading plan. That's to protect capital in the account. No string of trades or no single trade can exceed 3%. Um, so max positions on these, they turned out to be 18% by the end of it, one position, which is better than the year-to-date change in the S&P 500 in one position. And there are plenty of entry into this uptrend. And I just want to show you guys the phase C entry that I took. It took us a long time to get to this point where we can accurately measure a phase C spring and get into it. So you guys stay tuned. I'll show you where to go to do this consistently, right? This is the big part, the 30-minute cooldown. Everybody in trading knows about FOMO, but do you guys know about JOMO, the joy of missing out? That's what this 30-minute cooldown does for us. It's probably one of the most important steps in this entire process. You could not use relative strength. You can not know the COT. You have to know that the macro is lining up. So 10, 20, 40, about 55% here. As long as you're doing this, you can walk out with some money every time. So, and then the conviction score, which is the final gatekeeper, it's got to be a good looking trade. We only date dimes, lawyers, doctors, right? So, uh, what we're gonna do is we know that 11 o'clock is coming around. So what do? We're gonna come down to 11 o'clock and we're gonna set our vertical line there. But now we're gonna use our 1 hour as our intermediate time frame. I'll tell you why, because we're taking a top-down approach. We're coming from monthly data, weekly data, daily data, 4 hour down to the 1 hour. You can see, as you can see in the 1 hour, you can see the structure pretty well. But here, down on the 5 minute, the structure is extremely clear. We can see the stopping actions, the accumulations, right? As this, we move through phase. I'll put another vert over here for you guys and we'll just walk with me on the vert. So we push price down here. We can see that volume diminished. So supply diminished. And that's why prices bounced up here. Here you can see that the large operators wanted to kind of volley price down the middle of this range. And what we'll do is so you guys can see what I mean by that, right? Straight down the middle of this range, right? We put the dotted line there. So it's basically 90% of all the trades now are algorithmic. So they'll see these through triangle arbitrage or whatever they're using to send their signals, and they'll know that this is away from its fair value price by 50%. So the algorithms will buy back in, buy exactly up to the 50, and then it's back in control by the large operators. Now, the large operator then sees this as a discounted level and or just a enticing level to do their business again. So they already stopped the trend here. And this is phase A, broken down here. And I'll give you guys this. And these are all the things that you'll see at 11 o'clock. And that's whenever you start your analysis, which then begins the 30-minute cooldown. So say none of this happened. We know FOMC is at 11. We drop our vertical line there. We just allow it to play out while we look at the market structure for the next 30 minutes. So we got phase A there. We know phase B is going to be a conditioning. They're going to test the maximums and minimums, right? Boom, boom. There's all the phase B tests of the maximums and minimums in between these areas, right? The second and third point of fear kind of here in these areas, but this is the true last point of fear, and we know this is going to happen. But in hindsight, this structure is here before 11 o'clock. We have a volume spike here at 10:05, at 10:15, which is 45 minutes ahead. So we know effort versus result. Prices are going to be hugged in this area. Next 4 or 5 bars is going to cause something, but this has nothing to do with the 30-minute cooldown because we can't operate until after when we get that final clarity. So let's go and look at the 6 price bars after 11 o'clock. So let's count 1, 2, 3, 4, 5, 6, right? And now it's 11:30. Guess who showed up in that little bit of time? Oh, the large operator. Isn't that crazy? And we know FOMC is coming 37 days from now. And we know when it happened last time. And I bet if we go back there, they're going to be doing the same thing here too. So we see an accumulation in the background. We can already map out phase A. We sat there and did that for the first 30 minutes after, just like I did. And now what do we see? Inside of this is, oh, look. And we understand the trap, you know what I'm saying, the double bottom trap. If that's what you guys want to use, pattern recognition like that, if that's your pattern recognition, go for it. I know some traders that use the cord of wood analogy, the down up price action. We just use regular black bars. So that's what we're gonna see as that, right? This constriction of price. I use VSA, and what VSA is telling me is we have a capitulation bar here, right? And that capitulation is what we need. We need that capitulation in order to do what? Rope in brand new sellers to force and give us a better discount to take the buyers who are early and turn their buys into sells to later fuel an even bigger move to the downside as their sell stops are being triggered because they're too early. So that's how this capitulation action happens. But next, something peculiar happens as well. And we'll look at the volume to show us this. If we had all of this volume to the downside, why would the next price bar shrink in both volume and spread? Same thing with this compression bar. That's an inside bar. It closes back inside of the range of this big volume down bar that should be the most bearish bar of all time. And then next we have what? The next bearish bar is the lowest bar of the previous one, two, three. This is a sign of no supply at 11:15. So if you guys want to be faster than me, try it. If it shows up really well for you, if you can read that no supply faster, go for it. But to be safe, I'm always going to do my 30-minute cool down because by the time we get here, this no supply bar by 11:25 has now just confirmed itself because now we're back within the range and body of this bar. And if we were going to run a fib from the bottom of this engulfing down bar, right? Once we get to here, it's a violation of that fib. At what time? Anytime after the 30-minute cooldown. So all we have to do now for any FOMC statement is just do a 30-minute cooldown and then assess the damage that had been done. And it's either going to look like this or it's going to flip over and it's going to look like a distribution. But after that 30-minute cooldown, you're clear. Stop loss can be set below the spring, below the last point of supply, below the 30-minute cooldown candle. I'd be safe to say put it below the spring because we know it's not going to go there. But what I've seen consistent is about a 6-to-1 off of that, which really turns into a whole lot more like a 12 if you use the last point of supply, the test, the exhaustion, or whichever. But from that point, as you guys, and this is a 5-minute trade every time, and you're safe. Excuse me, and you are safe. So it's still continuing to go up. It can do that if it wants. Something I want you guys to see. So I'm not just playing around with you. We'll go back to FOMCs from before. If you guys go and look up when the last one was, it's my job to know when these things were. But we can go select a date to a previous FOMC of any kind. But I know that June 18th was another one of them. So I went back and I wanted to come check yesterday what it was. So this starts June 18th. If we come down, and this should be set up at a 6. Not to say that I would come down here and do this precursory because you can't. But to look back, here's 11 o'clock. Here's 11:30 with the 30-minute cooldown. I don't care what's going on. They're going to be creating structure because the FOMC meeting is the capitulation bar. It's going to be the capitulation bar. So as we get to 11:30, something's going to happen. Now, we can try to be the fastest gunslinger in the whole Wild Wild West, or we can wait for that 30-minute cooldown because we don't know what they're going to do. They're going to be whipsawing everybody, but after 30 minutes, they have to show their hand. So here we go. What do we see? We see an ultra high volume down bar in the beginning that closes at the upper 75% with the long lower shadow. It looks like a down bar, but it looks like a kangaroo tail, a heavy kangaroo tail to the downside, which shows professional buying and professional selling, but the selling being overcome by the professional buying. You guys see that? Can you read that in that price bar? Okay, the next bar is a compression bar. We've got capitulation, we've got compression, and we've got an exhaustion to the downside movements. We can't go any further down. All the prices are closing. This is the lowest price. This is the lowest close. The next one has a positive, even though it closed right on the same close, it was still positive. Positive. This one was negative, but still closed. If we look at the closing prices, this close was 144,570. This close was 144,562. So it's still better. 558 still better. They're closing higher. This one, the last bar, close here, buy stop above here, stop loss below there. And then we can let that thing run itself, probably about 5 bars at a time. Let that play out. And that's what I was saying. I think at this point, I think I would have been either riding my this stop loss up to here. But no, I think I would have been doing it from the 1 hour perspective. So I trail my stops with the 1 hour, the 21 EMA on the 1 hour. And yeah, this is just, you know what I'm saying? It'd have been a quick 50 pips,
That
60
is
pips.
that
But
is such a robotic move, bro. Just understanding the relative strength, like understanding that cool off that time after 11. Like, I feel like that's the whole cheat code right there. Like, you don't have to teach anything else. Like, we could just end the Zoom call.
yeah,
Because if they didn't understand that, I feel like my son could have caught that.
yeah.
Like, it's so simple. It's like at 11, they got to do something. Boom. Now you're watching 30
Now
minutes go by.
that's it.
Yeah, no.
That's
They,
it. Whole time in profit, bro. Whole time. Like you're not getting because you catching C. You catching C, D, E. You catching E before it come out back to the creek, any of that. Look, 108 pips, bro.
Caterpillars do evolve.
Hey, and anytime it's a FOMC, bro, it's gonna be a 4 plus. By the time it gets to 11:30, what can we see? The structure has been broken. Second point of fear. They broke through it like it wasn't anything else. Look how fast they got through the range. They usually got to fight the 50. They ran straight through it and ain't came back yet. And this is June. And I looked at August. August did it. I'll probably go back to the next one. So shoot, I did it with Euro. The
Do
Euro did
another
it
one
too.
so they know you ain't
Yeah.
capping, bro. Do one more. Do one more, bro.
You pick it, bro. I don't you pick it. I don't
Uh,
care what pair. I don't care what it is, bro. I don't care what news event. It don't matter, bro. Just pick whatever.
do
It not
Aussie
even matter.
USD. Do Aussie USD.
For the Aussie statement.
Yeah,
All right, we got to go to Forex Factory and look up the Aussie statement.
facts.
Hold on, let
Because
me-
this stuff is crazy work.
Yeah, bro. I got a feeling, bro. So we'll just filter Aussie Central Bank, apply, and we'll go back. Don't matter. It doesn't matter because now they got the pick a date bar replay.
Uh,
What you want to do? August 2023, the whole month of August. Maybe they had some RBA monetary policy statement was a 630 statement. August 3rd. Not sure if that's the one or if there's anything else. This is all of August. Here we go. RBA cash rate July 2023. It was at 9:30 p.m. Oh no, hold up. I got a thing. Got log in so I do the actual time. So it was a July rate statement, I think. Dollar FOMC. What is this? No, they switched this back to 2025. Oh, yeah. It's looking like it's mine. That's what I was doing before. Bruh. What is this thing? Not doing it. So we gotta find a date though. That's it. Once we find a date, we'll do it. RBA statement from August 11th. We could do that one. Or we could do something further back. I just feel like doing something further back. At a time where I for sure don't know what's gonna happen.
Highlight highlight the month. Yeah, I think that's what.
And I think that's what it was messing up too. June 5th. June 5th. So June 5th, 9:30 at night. June 5th, 9:30 at night. That works out. All right, there we go. Now we back over here. All right, June 5th, 2023. It's gonna start me. It's gonna start me at midnight. We know that the statement is at 9:30 at night. So 21:30 on here. So we know that it's 9:30. I could leave that at 10. Yeah. So we not gonna touch anything until 10 o'clock. But we want to see what's going on in between 9:30 and 10. Okay. So we're not worried about none of the price action except for 9:30 to 10. All right, that little tiny window of time on June 5th for the Aussie. So we just gonna sit there and let this thing do whatever it do. We ain't worried about it. It's gonna follow that price though. Oh, it's still going on five at a time. Let me slow this down. Flip blast straight through the zone. Okay. Now, I'm not sure if you can see it, but I could see some sort of structure kind of playing out here, right? And this is the type of stuff they do. This is enticing, ain't it? Somebody try to get into this. Oh, yeah, they feel some sort of way. All right. The next bar is the statement. Okay. It's 9:30 or is it 9:50? Oh, snap. There go 9:30 over there. Five, one, two, three, four, five, six. Yeah. So this is the statement. We see the big bar, which we expected, right? The statement. And now we're gonna see, is this a reaccumulation, which it looks like phase D right here, or this could be just some big nasty move to the downside. But it looks like a lot of conviction to the upside. So I see the upside movement, a lot of buying in this up bar, but buying on an up bar could be selling. The next bar is a sell. They didn't make it too far above, and prices are still closing below. This could be a sell from off of this, but we can't read that just yet. All right. I would say buy this. I would put my stop inside of the range or at the beginning of this. The volatility would be lower, but I would still use a buy stop limit. to make sure we get a good price and they don't use slippage to knock us into a worse area above and freak us out some. But this is only 21 pips. This is down here on the lower time frames. So being down here at 64 pips is not bad because we see that they're gonna go 100, 200 pips on stuff like this. And then this, if there's another monetary policy statement, if there's a dollar monetary policy statement after this, we do have to take that into account. So that's just one other thing. I don't think we looked at Forex Factory for anything other than this. That's just a disclaimer. But we'll look at this. Yeah, we'll just leave it somewhere over here. I'll adjust it if it goes up higher. I want this to be about a 6 because I've seen that consistently, but we're still looking to see what this stuff does, right? Boom. So we're triggered in. The main thing we're looking for here is follow through. Things like this, ultra high volume down bar, like that would need to consistently stay below that bar in order for that to be seen as selling. Prices are holding. We're still above. I just push this thing through. So with all of that supply that came in, if we're not heading at like a straight line down to the stop loss at this point, I would probably still keep this going. So we're already triggered into the trade, and it doesn't look like it's coming um, back down anytime soon. This point would be chilling out in profit, and that's what I'm gonna do. I'm gonna speed this up again to 5 at a time. So again, here on a 5 minute to really assess what's going on. Well, oops, well, 30 pips in profit by a couple days. You're holding this thing. A 5 minute trade that's holding for a couple days is it's already crazy. So there we see a massive amount of supply come in, but based on where the structure is below, right? And our true, this is where all of the demand came in also. But you know what I'm saying? This is a 5 minute trade entry that's already been holding for some days. The fact that it's not out in 5 minutes makes me want to continue to hold it. And a lot of traders early on would freak out with the amount of drawdown at this point, but this is all right. This was a 4 plus, right? We can see a reaccumulation. We called it. We could identify it as a reaccumulation. So we expected prices to continue to go up. Something that we could have done in hindsight here, maybe draw a fib on that bar, catch the 61 eights. But if this was in your drawdown, I wouldn't tell you to add to the position, but I would also tell you that it hasn't broken the 61.8, right? So if you did oversize it, oops, then that's the only thing that would make you want to get out of this position. But right now it doesn't, there's nothing that's screaming get out. And again, this is all that policy statement. And now we are Thursday the 8th. We took this trade on Monday. By that Thursday, you made it through Wednesday. You made it through the reversal. This is that type of trade we're talking about, Dove, where it's just like an all week banger. And this is a 5 minute trade and I had no idea, but it's up 2 to 1 right now. Again, it's a 5 minute trade. And like I said, we could have moved this down even lower and changed that risk to a little tighter, but it doesn't really matter because we're still risking the same amount of percentage. And prices are, they're gonna do what they're gonna do, bro. Like I haven't seen these things not go like six, but that's a lot of supply, so I'm not tripping about that. I probably would have taken profit around at 100 pips. Yeah,
Easy.
easy days. But that's not to say that this thing's still not going to continue to run. So I might 10 times the speed on these and see.
So also, um, just even trailing the stops at that point, right? Like you break 100 pips. I mean, at this point, everything is free money. I'm just moving my stops to the lower highs,
Yeah,
um, or excuse me, the higher lows as it continues to push up. But yeah, I mean, maximize that, right? We got in that joint, and I know we used to talk about that a long time ago, right? Like really like maximizing those wins when we get in.
that's
Um,
that's a fact.
but then like you see, like you don't take pips at 100 pips, like now you back at
Oh yeah, now, but that's why I came to the that's why I came to the 1 hour because like I was saying, I would usually trail based on this the green, right? So there's certain times where we may have already been tapped out of these, but the 50 is our red, and that's like the usually the lowest point. So this move may have tapped us out after getting in here, but what would have called us to action first would have been the ultra high volume. And that's something we weren't talking about while it was moving, but the ultra high volume is gonna get me out or back in uh every time. That's the thing that I'm looking at. So here, when I saw this ultra high volume, we're really assessing should we start to trail a lot tighter? And this is on the next week, Tuesday. So yeah, we probably would have been talking about covering some of the positions at 120 something pips, right? Yeah, just like we
sure.
talked about 100, we're down here probably getting out with 89, 90, and then reassessing this whole base here to say, was that enough? Was that enough to break us down? But no, that's just them taking a break, and this is another reaccumulation. Second point of fear, the exhaustion, the back to the edge of the creek move, and then the continuation up into this area, right? Because this would not be enough conviction to the downside on this movement. And then we don't know what this is, right? Oh, 11 o'clock. FOMC statement, probably. That's what I was saying. And then we would have been in here like this. Now let's check this out, right? Option V, right? 11 o'clock, 30 minutes later. Oh no, this is the hourly. We gotta go down a little bit. Where's that next? There we go. 11:30. Well, what we got? Oh, look who showed up. The capitulation, the compression, the exhaustion. Buy that. Yeah, we'd have been here getting our money back. We'd have been out at 80, and I'm not sure if that would have worked out. If just that part of it. Yes, it did. And guess how much it went? About six. I'm gonna cut the tape on that.
That's yeah, because that's crazy, bro. Because like
FOMC to the next FOMC. That's all we're doing. Trading to the next FOMC meeting every 6 weeks. I'll see you in 6 weeks. We don't trade anything other than that, bro. It keep you safe, it keep you out. And every time I do these, bro, 3% every time, 3% risk. for times five. I'm gonna do times five because look, times five we always hit. We times five and three times five, 15%. You're gonna beat the S&P every year in one trade.
That's just 1 month.
One
You say
trade.
every 37 days, basically, right?
Yeah, every 37 days, bro.
Are you holding those positions for the whole 37
I'm trading,
once you get that direction?
I'm holding them till five because at five it turned around.
Mm. Mm.
Get right back in the other way because understand this strategy is for the World Cup Trading Championship. They trade every day.
Right.
Why are they up 200% that fast and don't never leave 200%? I got something for the ass. That's all. That's all. That's it. That's it. We can cut the meeting off. It's people that trade for different reasons, right? And I said that at the beginning when I talked to my students. What do you trade for? See, me, I trade to be the best. I trade to be a professional at the highest level of competition. And that's in everything I do. So hey, I took the system from I just want to win one big trade to what the question I asked, and this is for everybody else, develop a trading plan, back test your strategy, take your back tested trades, your emotions during your trades, and put that into AI, have it prompt you as your World Cup Trading Championship coach on how to make and construct a better trading program that fits you and your personality, and then ask it to ask you three questions that will better assist it in helping you. And boom, you'll have something like this. We can use mine until my alpha uh deteriorates, but I don't think I don't think measuring human behavior is ever going to change because it's so inherent to the individual to change their behavior. Like it's so hard. There's some things and
Mhm.
influences that will not allow you to change your behavior. You are the sum of the five closest people to you. Now, the five most wealthy individuals must think as one entity in order to maintain that amount of wealth. So they're going to be moving like this every time. There's no way they can hide themselves because volume exists. And as long as you can read volume,
Mm.
you can see that, you can see them. And we were saying where we would get out and what would make us do that, but we know what caused it because it's the same time every day. How do you manage a World Cup portfolio for the whole year? Well, because some people just want to make money trading, but some people want to
Right.
perform at the highest level of trading.
Right.
But my dog, I'm gonna go ahead and close that out with that. You got any closing words for the people? We about to get this and put this on some stuff. Hopefully this wasn't too long, but this is the first of many. Let's go get this paper.
Yeah, man. Nah. Only thing I got to say is phenomenal job, man. Instruction, demonstrations, just phenomenal, bro. So hats off to you on that. I do want to talk to the people a little bit. We plan wealth management trip, the second annual Pips and Pancakes Cornerstone Wealth Management Retreat. So if you guys are truly looking to, get some more depth on these concepts that we're teaching from a preparatory standpoint, definitely reach out to either me or Jay, and we can talk about it. But yeah, man. Other than that, guys, look forward to more of these, and stay tuned, man. We back. Let's go.
We back. Let's get it. Hey, that fib training coming up next because there's a couple fib moves would have had you right in this. Like with the extra entries, that's a smacker right there. I don't know if y'all seen that one, but I know Dub did. So y'all gonna need to be able to get in multiple entries on these. We not just about to sit here, but one position 18%. We gonna load the boat. So stop playing. All right.
Exactly.
That's all I got, man. I'm super excited for that. I wanted to get that out before I had a heart attack or something. Yeah, much love and appreciation, y'all. It's always love. We'll holler at y'all. Pips and pancakes. Me and Dove, we out, man. Y'all know what it is.